do yields go to 1.75? What would it take to get to that level?
So what you will certainly see is if you have continued US dollar overvaluation and the creation of additional deflationary forces which would come with that, that would take the US bond yield to lower levels. But then actually we have to think about something different. And I think it is one point to discuss the 10-year nominal bond yield level, but the second point to discuss here as well, what is going to be the future slope of the US yield curve. And I think what we are going to see in the next few quarters is a steepening of the US curve. It is going to be a steepening of the US curve because short-term interest rates are going to fall faster than long-term interest rates. Now, we have actually made a study in which we are looking into the inflow of long-term capital into the United States. And you look at relative to the current slope of the yield curve. And what you have seen is actually there's a disconnect. So the flow of funds into long-term assets in the United States, we have released that in our yesterday's FX morning. That has, over the past few months, that's come significantly lower. It is showing a complete disconnect with the still current slope of the curve. And that actually tells you that the flow of funds in America as well paint a picture of upcoming economic weakness to which the central bank better does react.
Frederik, do you agree with that? Where do you see treasuries going?
Yes, absolutely. I mean, we could see some short-term squeeze to some extent, and at least a moderate re-steepening in the curve in the short term. I guess it will all depend also on the next Fed meeting and the communication around the, the sequencing, the pace, the extent to which the Fed could actually cut rates, whether it's interest rate cuts or more than that, with this element of circularity that probably forces them to act at some point. So if we have some correction in market expectations, as you know, they are much, much lower than the Fed dots, we could see some re-steepening in the short term if the market doesn't buy this idea that the Fed will only cut twice, for instance. Then longer term, as you said, I mean, inflationary pressure are not very significant in the US either. It's true that there are a number of temporary factors that could fade over time, but maybe we'll need to wait until later this year, if not next year, before we get I would say, fundamental push higher in the long end of the curve.